Welcome back to another episode of Bitfinex Talks. I'm your host, Ricardo Martinez. Today, we have a very special episode for you. I have Bitfinex CTO Paolo Arduino here with me. We're going to discuss all things halving because everybody's really excited about the halving that's coming up in April. And Paolo, how are you? Thanks for joining
I'm
me.
doing great. Thank you, Ricardo, for having me.
It's a pleasure. Paulo, first of all, we just saw the launch of the Bitcoin ETFs. When they first launched, like within the first few days, Bitcoin kind of went down in price. So a lot of people were skeptical. But now we see a voracious demand with these ETFs buying up all the Bitcoin that's available on the market. What are your thoughts on how institutional investors are reacting to Bitcoin's new price level?
Well, I think it might be we might be still in the FOMO realm here because I feel like the excitement of institutional traders, hedge funds that before never had the possibility of buying Bitcoin, purchasing Bitcoin, could be massive. So now we are seeing some hedge funds, some funds, some big funds put in a percentage, even a small percentage of their total allocation into Bitcoin. So that is, a massive drive, in my opinion. But I think there is still a specific group of funds that is enormous that didn't yet tap their toes into Bitcoin, and that is the pension funds. When that happens, I think we are going to see another massive buying interest in Bitcoin. And I think this is something that we will see in the next months or even in the next couple of years. I think pension funds historically a bit more cautious, a bit more conservative, but I don't have any doubts that eventually, this the interest also from their side, their investors will be pushing the investor managers of these pension funds to start putting some allocation in Bitcoin. And I think it's all exciting. I want also to be careful on the downside of this massive accrual of Bitcoin into DTFs. So we, as Bitcoiners, we are also supportive of the self custody, right? So it's exciting for the price action. On the other side, we I wish at least that people will not get too comfortable with just investing in Bitcoin through the ETFs. Bitcoin owning and holding Bitcoin directly is just feels different.
Thank you. Two questions, I guess, based on your response. Like, how much do you see, like, for pension funds to put in allocation, like 1%, 10% of their portfolio? And then also, do you think we could see the rise of paper Bitcoin that maybe would supersede the 21 million limit in the case of the ETFs?
I think so. When it comes to the allocation, I would say between 0.5% and 1%, right? I think, and that would be more than enough. I think the the problem with paper bitcoins is big, right? Because also become you if you sum also the size of the contracts on the futures markets and so on, that could become similar to what we are experiencing with the gold. It is being said that paper gold is an order of magnitude. The paper gold market is an order of magnitude bigger than the actual physical gold market. That is kind of scary because eventually the beauty of Bitcoin, and I would say gold, but specifically of Bitcoin, is that Bitcoin is a product that is built for the worst case scenarios. So when countries, when there is unrest, when there could be even an apocalypse, not, of course, I'm not talking about the meteor coming or bumping against the earth, but I'm talking about these enormous social unrest that we see with wars going and popping around the world. Bitcoin is built to give freedom to people when it's owned physically. And so I think, paper Bitcoin is purely speculation, will not help will not help the people, will not help in the cases for the situations that Bitcoin was designed for.
Okay, thank you. No, I appreciate that response. I want to kind of change gears here. How has the evolution of Bitcoin, like it's come a long way since its beginnings, how has Bitcoin's evolution influenced Bitfinex's strategies and offerings over the years? And what do you foresee as the next significant milestone for Bitcoin in the overall cryptocurrency market?
Bitcoin for Bitfinex has always been, the cornerstone. The reality is that we have seen over now almost 12 years of operation how all the other currencies came and went. The only common denominator for Bitfinex has been Bitcoin. And one of the reasons is that, well, first of all, was the first one, but is the only true blockchain and currency that is decentralized. Is the only chain that and the currency that was built with an ideal that is still today respected and maintained well alive and improved over time. So I think as an exchange, of course, creating diversity and allowing people to trade different currencies is important. And we do, I think, really good due diligence on the projects that we had. But I feel like that for Bitfinex, Bitcoin occupies a special place in all our hearts.
I agree. With Bitcoin reaching its new all-time high, what factors do you believe contributed to this achievement? Do you put most of that on this demand behind the ETFs, or do you feel that there's like a different kind of macroeconomic factor that has created this new demand?
Well, I think there are different factors. There are companies like MicroStrategy that recently have been purchasing a lot of Bitcoin. The ETF, of course, is important. Another huge driver for demand, and the halving is coming. So we are living in a fairly unique historical time with these three things. Well, not only MicroStrategy in the first category, but there are many companies that are acquiring, and also governments. We have seen yesterday night President Bukele tweeting about the fact that they have their new cold storage for Bitcoin.
I
That's
saw
actually
that. I saw that.
yeah, and that's super cool. And you see governments now, they are acquiring, they're storing Bitcoin themselves. So the demand, this is the new gold rush. And I think we are, with these three things together, this new category of investors that are private companies or governments. Then we have let's say the public ETFs that give access to a proxy to purchase Bitcoin to all retail and all the other institutions. Plus, you have the Bitcoin halving. Is like three stars are in perfect alignment for a specific moment in history.
I want to change the subject a little bit and ask you, with the block reward being reduced to 3.125 Bitcoin, do you see any like security budget risk for the mining industry? Do you see any risk for smaller miners maybe to not stay afloat? I know you're kind of uniquely positioned. I know Tether has a mining operation, so I'd appreciate your insight like on how you see like the halving actually impacting both the Bitcoin network security and then also the mining industry in general.
I think that is still quite early to think about the problem of the security budget. I think, look, I think it is all about game theory, but I can see how with transaction fees, even if in the future, imagine 50 years from now, when the block reward will be much, much smaller, what will happen is that transaction fees will go high and Bitcoin will become the settlement network for big transactions or big settlements, or for Lightning channels to be settled after and every certain amount of time, right? So the most important thing is that we ensure that Bitcoin blocks will be full and will remain full, and fees and the market of fees will prosper. That's how I think, the security budget will not be a problem in the future. So nowadays, if you want to open a Lightning channel, if you want to settle it, you have to, to broadcast a Bitcoin transaction. So there will be always reasons to have full blocks for Bitcoin, and so that's how I feel like is a known problem. But of course, it's great that the people are concerned about it, because we have to ensure that technology will, and the solutions that we build around Bitcoin will always settle eventually to Bitcoin as the most secure layer ever built by humanity.
Okay, cool. I appreciate that. Thank you. I have a question just kind of spontaneously. John Carvalho of Synonym recently on Twitter has been talking about possibly a block size increase. Like, what are your thoughts on a possible future block size increase?
I think that the block size increase would just move even if you make it 10 times bigger, it just kick the problem down the road. To me, the beauty of the current block size is that it is designed for block size and block time, right? So you have basically, if you want to participate to Bitcoin, you have to download 1.5 to 2 megabytes every 10 minutes on average, something like that. It means that wherever you are, in the most remote part of the world, or in the cheapest, or sorry, not cheapest, but the poorest country in the world, you will always be able to participate to Bitcoin, because you will be able, most likely, to download 1 megabyte every 10 minutes. So changing that to 10x or 30x, 4x, or 100x, I think is just moving the problem. And I believe there are ways to improve speed. Lightning Network is one. Lightning Network is not complete. I feel like we are just at the beginning. Lightning Network, just to be open, is not perfect, but it's a start. It showed how you can create a peer-to-peer system that leverages the security of Bitcoin to create, trustworthy channels among two peers that don't know each other and they don't have to trust each other. So that's the way to scale Bitcoin. I don't think increasing the block size or reducing the block time is the way to go.
Okay, cool. As we approach the fourth Bitcoin halving, can you share your thoughts on how this event might impact the price, first of all, and then also the broader ecosystem, and what you envision as Bitfinex's role in this proceeding rollout and adoption of Bitcoin?
I mean, is the thing on the price. I mean, the effect on the price is hard to predict, because let's think about it. So the vast majority of Bitcoins have been already mined. So it means that, sure, we are going to have only 3.125 Bitcoin mined every block. But, that is already today, the demand of Bitcoin is far outpacing the existing mining. So we are seeing with these big institutions and ETFs and whatever, the demand of Bitcoin is far exceeding the current mining output. So sure, the mining output will reduce by half, but that is a perception issue. The vast majority of the Bitcoins have already been mined. So the entire liquidity that is available is already out there. And so if you want to buy Bitcoin, you have to buy it from someone else, most likely. Not you. You shouldn't expect to have a miner selling to you.
Okay. One question I have for you is, do you feel like this halving is different? I feel like with the prior 3 halvings, like Bitcoin, first of all, was seen as like way experimental, way speculative. I feel like this halving, Bitcoin kind of has some legitimacy in the financial world. And not only that, we're seeing this trend, like you mentioned, where MicroStrategy and other companies like Tether are buying up Bitcoin for their balance sheets. There's now institutional vehicles in the form of ETFs. Like, do you feel that the conditions surrounding this halving are very different from the prior 3 halvings?
Well, this is the first halving that the institutions are actually part of. The thing that excites me about the halving the most is that is a reminder of the fact that Bitcoin is acting exactly as it was designed. There are, in other with other blockchains, the core developers, there is a group of core developers that can act like gods and change the monetary policies. Some makes the coin a bit more inflationary or deflationary, or have these really complex mechanisms. And every now and then they change things. But the most important thing about the halving to me is that is reminding to everyone that is a clock, and it keeps ticking, will keep ticking until every single Bitcoin will be mined. There is poetry in that, I feel. And the fact that Bitcoin is so ossified today and is really, really hard to change is one of the most beautiful and elegant things that humanity could create.
Okay, cool. Another question that I have for you is, right now there's talks within the Bitcoin community about forks like AnyPrevout, CTV, Opcat. Like, do you have any opinion or preference on these decisions that may be made here in the very near future on how to improve Bitcoin scaling and security and privacy?
The problem with that is that it's not that I don't want changes, right? I wish only good changes could end up in Bitcoin. The problem with defining what is good or bad is extremely subjective. So, of course, user activated soft forks are a great way to create a consensus around the interest of a specific change. I really like that. I think we are far past the block size wars and everything that really tried to divide the Bitcoin community in the past. I think the issue again is that if it's too easy to add new features to Bitcoin, then you could make the halving to be 6 years instead of 4. Or you could say, well, 21 million is not enough. Let's do 21 and a half. Right? There are so many things that it's scary to think that Bitcoin can be changed. So you could say, well, just one change, right? Just one change more, and then not change anymore, right? But then if you keep doing that, eventually you will say, okay, well, I know that I said that that was the last change, but let me do the last change. And you will keep going until eternity, until Bitcoin will not be Bitcoin anymore. So I think eventually there will be some changes that will be applied, but the way it's being delivered, the way it's going to be approved by the community and allowed in every node is going to be extremely important.
Okay. I understand your conservatism totally, but I guess I kind of want to get your input. Like, do you feel that there's a danger in ossifying Bitcoin? Like, at this point, I mean, do you see a need for continued changes in the near future for Bitcoin to scale and meet its global demand?
I think that there are many more risks in non-being ossified than being ossified. So Bitcoin can be used for already. So I think with more and more minds looking at Bitcoin, there are ways to create utility outside of Bitcoin on top of Bitcoin without needing changes. Could be controversial, but things like Liquid are an interesting approach. And there are other approaches that don't need the change of Bitcoin. Because again, the fear is that without proper ossification, and you cannot be a little bit ossified, because the problem with ossification is that either you are ossified or not. It's like the same thing happens with the decentralization. It's not that you can be, oh, I'm decentralized, but oh yeah, but I'm adding a little bit of centralization, right? If you add a little bit of centralization, as small as it is, you are centralized, right? So compromises, there are things like ossification and centralization where you cannot have compromises. And there are arguments for both sides, right? For both sides. I'm not saying that the rightful thing for Bitcoin is never have a change in the rest of its life. What I'm saying is that it's really important to be ossified, and if it gets too easy to add any change, like any breakout and so on, we might regret it in the long term, and we might lose the ability of Bitcoin to be as resilient as it is today.
Okay, wow, that's very insightful. So you mentioned Liquid, there's Lightning Network, there's Fedimint and Cashew, which are eCash solutions. There's also things like BitVN and MintLayer and other side chains. Like, what are you most excited about as far as like a path forward for scaling Bitcoin?
I think Fedimint is really cool. I think so. The way I think it is that the blockchains are in general failing from a technological point of view in not Bitcoin, but in the purpose of other chains is usually trying to create some trade-offs to be faster than Bitcoin, to be able to build more things on top of their chain rather than Bitcoin and so on. That's fine. I mean, all the experiments and everything, it's all good and fine. But the reality is that to me, the ability, so there is only one secure layer in the world that, as again, due to the ossification, can add security to many other projects. And I really like the concept of scalability out of the first layer, right? And I like the fact that the blockchains are actually global shared states, right? So the consensus system required for most of the time a global shared state where everyone agrees to the current state of the network, so that there are systems to avoid double spending and so on and so forth. But the problem with global shared state is that is limiting, is extremely limiting. Means that imagine a future where you have light bulbs that are purchasing their own or paying their own electricity bill, and fridges that are buying the milk for you because you finished the milk in the fridge. And so we will need a level scalability that the current physics, not talking about hypotheticals or subjectivity here. The speed of light is all about physics, and there is a big limitation factor for blockchains that have a global share state. So the only way to solve that is scale towards peer-to-peer solutions like Lightning Network, but as we said, it requires more development, and have federations and have ways for people to interact with each other without having to share everything with the rest of the world. Because imagine if I have to process in my node every single light bulb on the face of the earth that is purchasing its own electricity. How that would be spam, right? And so the blockchains will be unstable, fees will go high, and it doesn't really make sense. The reality is that outside of the first layer, you should start going peer-to-peer. You should only interact with the node, with the devices that you really do care to interact with for that specific transaction or set of transactions. So I think federations are a good, approach, or a middle level approach between having a global share state in full and have and pure peer-to-peer. So peer-to-peer is one-to-one basically, and layer ones are enormous state machine. If you have federations that only care about a specific side of the economy, that is already an interesting one. So I like Liquid in a way that I think Liquid could be taken as a template, but being adapted to be more customizable. I wish my preference around Liquid is that it should not require this the current server beefy server solution that is currently run on. I wish Jades, I really love Jades as a hardware wallet. I wish Jades could be, I would like to establish, or for people to be able to establish a Liquid federation themselves with their family through maybe, and have Jades as the signers of this federation. And I wish these thousands and thousands of liquid federations that could pop out, could interact with each other and bridge with each other through bridges, and find good ways to optimize liquidity and so on. But that's, in my opinion, a much more scalable way compared to having a global share state for everything, and probably is easier than having peer-to-peer all the way. So that is the type of development that I would like to see more in the future.
Okay. Wow. Interesting. So, like what you just said about Liquid, like, isn't that kind of like the setup that Fediment is trying
Exactly.
to implement, like something similar, basically, where each like community or like church or school or whatever, like company could set up their own federation and kind of operate domestically, like in their community, right?
That's why I
Like,
said
would
I
you,
like Fedimint.
yeah, exactly. Okay, cool. That's super interesting. What do you think about like things like RGB or I guess like BitVM that have like client side verification? Do you see that as like a path forward or like method that could enable this kind of thing that you're describing?
Definitely, yes. I think RGB is, of course, a project that this is really dear to me, but also to us as Bitfinex. I think it's the proof that you can build smart contracts that are client side validated, that can work in peer-to-peer channels. And that, in my opinion, is like is again is how the what I want to see in the future. So I think um, stable coins like Tether, USDT should run on RGB, and most of the tokens in this moment are polluting blockchains heavily. Most of the tokens are created out of thin air and they are polluting blockchains. The only way to avoid blockchain pollution is to use peer-to-peer layers. Of course, you can, as happens on Ethereum, you can create layer twos that are again global share states, but they are still too global, to my opinion. The final form, with if I think about Freezer, that had, the in Dragon Ball, they have multiple forms. The final form of scalability is peer-to-peer. But I think federations, as we said, are a great approach. And in all these cases, you can start using client-side validated smart contracts that also can be extremely customizable and agreed upon when you establish a channel with the counterparties. So that is an incredible R&D project that is becoming more consumer oriented, and I'm grateful that with all the efforts from Peter Todd and Jacopo Zucco and Maxime and all the others, Federico, and all the developers that are working on it, is like there is a great team at Bitfinex that is doing wonders, working with the RGB group, I think is gonna be a game changer. And I like the fact that it's being taken extremely seriously, is not is being developed carefully, is going through different iteration to make sure it's solid. So is the beauty of and sorry for the rant, but the beauty of I think investing in Bitcoin development is that there is no token that you develop a new technology for the sake of humanity improvement and this new technology to be available for humanity, rather than you mint a token out of thin air and you sell it in order to develop a technology. I think is the outcome of the first case is much more important.
Okay, cool. I guess I want to get your input. I know they're very controversial, but like, what do you think of this whole? I know you said tokens are minted out of thin air, and I kind of agree with you. But what do you think of the whole ordinals, like stamps, BRC20 tokens, like this whole dynamic of using Bitcoin in a way that it's not intended in order to achieve some of these things that are happening on other chains like Ethereum or Solana, for example?
I think I don't like much the ordinals, honestly, but also I think is incorrect to say that Bitcoin was intended in a certain way, right? So I think everyone can do with Bitcoin whatever they want. Um, there will be consequences, and you could see everything as an attack to Bitcoin. So Bitcoin has to be resilient, because if it fails, because there are a couple of dogs' faces on top of on minted on top of Bitcoin, then probably is not that cool, right? So pretty sure that Bitcoin can resist to that. Bitcoin has to evolve and make sure it remains viable, also with throughout spam attacks. So I'm not really bothered about the ordinals or BRC20.
Okay, cool. We're kind of winding down, getting to the end of the podcast. Is there anything that I haven't asked you in regards to the halving or Bitfinex's path forward that you'd like to address?
I'd just like to say that I really do appreciate people asking more and more about the technologies that we are developing, including RGB. I think I'd like to see the excitement coming back about Bitcoin, and all the questions that we get, all the customers that are excited to trade Bitcoin, to get exposure to Bitcoin. Is gonna be, I'm really bullish for this year.
And I know talking about price is probably the most boring conversation in Bitcoin, but do you have any halving price predictions like towards the end of the year?
No financial advice, but I think we are going to pass 100K.
Okay, wow, that's exciting. Paolo, thank you so much for joining me for the podcast and letting me ask you a bunch of questions about the halving. Um, is there anything that you can, I guess, tell us like in regards to how you see the future of mining post halving, like in your opinion?
So mine is interesting because there is a question that we like to ask to all the miners around to gather to get their response. Is, if you had $10,000, would it be more profitable to mine or to invest those $10,000 directly in Bitcoin? And to us, I think the reality is that for the vast majority, is always more profitable investing in Bitcoin directly, rather than investing in mining to produce Bitcoin. But the reality is that of course there is a game theory. If everyone was only investing in Bitcoin directly and never mining, then the profitability of mining would go super high. So there is more incentive to do mining and so on. But in general, since there is a sort of curve for and also complexity in entering Bitcoin mining, I think the thing that I really do like about companies that are taking Bitcoin mining seriously is the fundamental service that it brings to Bitcoin. And with Tether, we are trying to decentralize Bitcoin mining, investing in mining around the world, rather than going always where in the location where the price of electricity is cheaper. And it's all about improving operations, making sure that Bitcoin mining remains sustainable, that you can build maybe renewable energy facilities around Bitcoin mining, so that it becomes not only a story about profitability, but is a story about protecting Bitcoin, helping the centralization of Bitcoin from a geographical and political point of view. So that is where I like to think, well, how I think about mining and how I like to think about other miners. We are actually protecting one of the most dear things to us.
Yeah, no, I agree completely. As far as like MicroStrategy's accumulation of Bitcoin for their company balance sheet, and then also Tether kind of following in MicroStrategy's lead, do you see this trend increasing for companies like as a corporate strategy to invest in Bitcoin?
Short answer is yes. I think there is an interest in diversification that is gonna just grow. I think, given the problems that we're seeing and that are so evident with the national currencies, with fiat currencies, there is no other way for every company eventually will want to have exposure to Bitcoin for a what if scenario, right? What if this happens or that happens? I have to have some Bitcoin in my balance sheet.
Okay, cool. Well, Paolo, thank you so much for coming on the show. I really appreciate you taking time out of your day to come here and let me ask you all these questions about the halving. Super excited to hear about what Bitfinex decides to do here in the near future after the halving. For our viewers, I'd like you guys to follow us on YouTube. We're on Discord, Twitter, Telegram, Facebook, LinkedIn, Reddit, pretty much all social media. If you want to find more content like this, we're going to be doing further live streams and interviews. I think our next one is going to be about Bitfinex Securities at the end of the month. So stay tuned. Thank you so much.
Thank you, Ricardo.